All right. Thank you so much for joining me today for this presentation about taxes. We all want to pay less, and in order to pay less, we need to know a few things that the government tells us, but it's that small print that sometimes is hard to find. And that's why sometimes we pay a little bit more than our fair share in taxes. So for today, my goal is to share with you guys some things that I have learned doing my own taxes and also by doing taxes for other people. So I'll start with telling you a little bit about myself. I came to US in 2002. I grew up in Romania and I learned the system, the financial stuff, everything about money in Romania. So when I came here, I had to learn a whole new financial system, from using credit cards, which I had never heard of prior to coming here. Well, theoretically, but never had any. And also a new tax system. So when I had a job in the beginning, when I first came here, I didn't have a whole lot of really complex things. So my husband was doing the taxes for the first year or two, but then I started working with a life insurance company and I became what then I learned is called self-employed. And I had to figure out what that means and what it will do for my taxes. And like any responsible person, I decided to go to somebody that I thought was a professional to get my taxes done. And she did, and I thought everything was great. And come year two, I went to somebody else and she told me, well, what the first person did was all wrong. And I said, well, I had no idea because I don't know what it's supposed to look like. So how am I supposed to know that she did it wrong? And she explained a few things to me. I found that quite interesting. And the following year, she couldn't do my taxes because she stopped working in taxes. So I decided to try to trust somebody else. And I stayed with a person for about 3 years. And then I decided that it probably would be better if I learned some things, because it seemed to me that every year my tax bill was going up. And Chris, you said you wanted to pay less in taxes. That's exactly how I felt. So I totally understand that. And so what I decided to do was to learn how to do taxes and to start actually doing taxes for people just to keep myself updated. Well, I did that for a number of years through a regular tax office where you just go in and see people and then come home. And then COVID came. And when COVID came, I had an opportunity to do the same thing for another company, but doing it from home. And with that, I learned a ton because I ended up doing taxes for people all over the US. So I learned a lot about things like state taxes and states that don't have taxes, as well as the federal. And because throughout all this time, I've been self-employed, I've also learned things for my own taxes. So this is why I'm here, and that's what I want to share with you guys. So my goal is to help people reach financial serenity. And that's why my business, Unbroke Women. Well, the purpose of being unbroke is to get yourself from being broke or having a bad relationship with money to being wealthy. But you can't just jump from one to the other. That doesn't happen. You'll be cool, but it doesn't work that way. So there comes unbroke, right? You go from broke towards wealthy by being unbroke first. And how do you get to financial serenity? Well, by creating, preserving, and then transferring your wealth. In order to create wealth, you start a business, or you can have a job, you have your money work for you, you do all those great things. And we can talk about that on a different occasion. Now, it's great that you make money, but how do you keep the money that you make? We all have to pay taxes. And that's actually a good thing, because it actually means we make money. Because if we didn't make money, then we wouldn't have to pay taxes. So it's a good thing to pay taxes because we make money. But how do we make money and pay as little as possible in taxes? Well, let's start by checking our money mindset first. Okay. So here are a couple of questions that I would love for you to ask yourselves. Just go over this. You don't have to say it out loud. You don't have to share with me how you feel about this, but just think about these things and just see how money makes you feel. Because ever since I've been in US, I learned a lot about money, but I also had the assumption initially that people that grew up here knew everything there was to know about it because, hey, they grew up in the system. I didn't, so I had to learn it. But if they did, it must mean they know it. And then I learned otherwise. I realized that most people don't know how money works. So I'm on a mission to help people improve their relationship with money. So figure out how money makes you feel and how do you feel that money is feeling about you. Is it coming to you fast, not so fast, when you need it, when you want it? How can you keep it? All right, let's talk taxes now. So talking about taxes, I know is scary. I know it's uncomfortable. And I know most people try to do everything and anything in order to avoid it. Why? Because it's an uncomfortable subject. It's not dinner conversation. When you meet with your friends, you're not going to start asking them, hey, have you done your taxes? Hey, do you know this is a great deduction? Hey, you know, I ended up having to pay this much in taxes and I really hated it. You don't have those kind of conversation with friends or with the family, right? Where you're not going to talk to your parents or to your kids about their taxes or about your own taxes. So people mostly avoid talking about it. As an entrepreneur, it's a great idea to have somebody else do your taxes because usually they're more complex than what we're comfortable with, which is okay. So you can use an accountant, you can use a CPA, you can even use an EA, an enrolled agent. Whatever you're comfortable with, it's okay. But the main thing is you also have to have a certain level of comfortability when it comes to taxes, because if you don't, then the person that you hire could be doing everything fine, but what if they're not, right? There's no way for you to verify that unless you know what it's supposed to look like. And when I say that, I don't mean you need to know what the bottom number should be, because if you know the bottom number, obviously you don't need an accountant or a CPA, but you should have an idea what it's supposed to look like. Have you made a whole lot of profit or a little bit of profit, or have you had a loss? How do you realize that? How do you figure that out? Well, you figure that out by, first of all, having some honest conversations with your accountant or your CPA and asking questions. And if you don't know this, it's okay, because if they're an expert in their field, they expect that you're not. And there's no shame in that, right? Just because you're great at what it is that you're doing, it doesn't mean you have to know accounting or you have to know taxes. So it's good to just ask a lot of questions. One mistake that a lot of people make is that they postpone everything until the last minute. Sometimes they leave it for April, especially if they owe taxes, because they figure, well, if I don't tell the IRS I owe them this much, then they won't want the money earlier. Well, the truth is, whenever you file your taxes prior to the deadline, your return will be submitted as on time. Your taxes due will still be paid on time if you pay by the deadline. So if you file, let's say, in February or March, you still don't really owe that money until April. Well, this year was 18, but around April 15, whenever the deadline is. So you don't have to pay early just to file early. However, if you start preparing your taxes early, at least you know what to expect. And if you figure that your documents are ready and you can file, then it's okay to file earlier than April. If not, it's okay. Take your time and gather all of your documents. You don't want to file an incomplete return, but don't leave everything until the last minute, because then what ends up happening is that either you're rushing and you forget things, and a lot of times what that leads to is less in your favor, because you usually end up paying more because you forget deductions, or you don't get the refund that you should be getting because you forget deductions. And the other side of that coin is that a lot of entrepreneurs, a lot of self-employed people end up postponing it, and you can extend the filing until 6 months later. So this year is October 18, around October 15, right? April 15 to October 15. Well, that's okay. And your return will still be considered on time if you filed an extension. However, if you owe taxes, you still have to pay by April 18. And since taxes really are an uncomfortable subject, it's not a good idea to drag it any further along unless there's some circumstance that prevents you from filing on time. So if at all possible, make sure that you get your documents together and get them filed on time. There's a book by Brian Tracy called Eat That Frog. And he recommends there that whatever your worst task is for the day, to get it done early in the morning because the day will get better. Well, the same thing goes with taxes. Whatever you don't like, which is taxes, get it done early in the year so it doesn't hang above your head as an ugly cloud because you're still thinking, oh my God, I gotta do my taxes. Okay. One thing that entrepreneurs are famous for is the shoebox method for keeping receipts. Now, I have a friend that always says she loves the people that come with shoeboxes full of receipts. Well, it's not really a good way, because if you have everything in there, you're going to get confused. So what I do, and it doesn't have to work for you, but if it does, you can use it. I have those sheet protectors that you usually put things into a 3-ring binder, and I have 15 of them. And the reason I have 15 of them is because of, I'm sorry, 16 of them, no, not 15, 16 of them, because it's 12 months in a year. So it's the one for each month, and then again, January through April, so 4 more. And that's because I know myself. If you know you're disciplined enough to get everything out at the end of the year, that's fine. You can just use 12, but for me, 16 works. So I have those 16 sheets. Oops. Hi, Doris. Sorry,
Hi.
just threw me off. I wanted to say hi. So I have the 16 sheet protectors in a 3-ring binder, and I put my receipts in each one based on the month. So within the binder, they're sorted out and they're all in one place. So when I'm ready to go through everything and I'm ready to start adding them together for my deductions, I know that's where they are. So instead of the shoebox method, you can use an accordion file, you can use those sheet protectors, whatever works for you, but sort them some kind of way because you make it easier for yourself. And then most people, when they think about taxes, they hope to get a refund. They don't really want to pay. They think and hope they can avoid paying. So that's pretty much as far as they go when it comes to thinking about taxes. All right, here are a few questions that you may want to ask your tax professional. If you just work with a tax expert, if you keep track of all of your accounting during the year, or you feel that it's just you in your business and you don't have a whole lot of things, so you don't really need an accountant, it's okay. But then when you go to the tax expert to get your taxes done, here are a few things that you may want to ask them. If you already work with somebody, that's great. You already know them, so some of the questions may not pertain to that conversation. But if you're looking for somebody else, or you want to check out a few people, then here are some things you may want to know about them. So if it's a tax expert and not your accountant or your year-round CPA, you may want to know how long they've been doing taxes. I'm not putting down anybody that's new in the business. I know that everybody starts somewhere, and that's great. What I'm asking with this question, or what I would like to know, is if they are new, then do they have the help in place? Do they have the person that has the experience that they can ask? We can all research, and the IRS website is a fountain of information. But if you don't really understand what's going on, sometimes whatever you're searching is not exactly what you're needing. So that's why it's important how much experience they have, or how much experience do they have access to if they don't have that experience. And then the second most important thing that you may want to know from your tax pro is if they are familiar with the industry that you're in or with the type of business that you have. So if you are self-employed, if you are in direct sales, if you are a solopreneur, if you have a business, do they know how that works? If you are in, let's say, Rhonda was here with the insurance industry, Chris, home improvements, or more specific cabinets, but if they are familiar with at least home improvements, if they're familiar with manufacturing, if they are familiar with real estate for the realtors, whatever industry that you're in, you want them to be at least familiar with, because each industry has specific deductions. So you want your tax pro to have an idea of what they need to ask from you. And I will say that's very important, because for 3 years that I had a tax expert that I thought knew what he was doing, he missed on giving me the home office deduction. And at the time, I had no idea about it. So I never took a deduction for my home office for 3 years. And that could have been some money in my pocket. Actually, could have meant having to pay less when I kept sending that check to Uncle Sam. And I would have been a whole lot happier. But I didn't learn that until I started doing taxes and I started learning about this. So it's very important that they're familiar so they don't miss deduction. And then you can ask them, especially if they have experience, what is a deduction that sometimes entrepreneurs overlook? What is a deduction maybe related to your industry that sometimes people don't know and they miss out on? Now, if you have an accountant or a CPA that you work with, or if you're looking for one, you may want to make sure that they can meet with you before the end of this tax year so you can plan for the following. Because there are things that you may be able to do either to pay less taxes this year or to set yourself up to pay less taxes next year. And a lot of things in the tax world are very time sensitive. So you definitely want this meeting to be before the end of the year. Now, you also want to ask them if they can meet with your investment advisor, with your life insurance person, with anybody else that advises you when it comes to your money. Because some of the planning on those things will influence how much taxes you pay. So you want your CPA or accountant to know what's going on, and you also will want your other advisors to know what's going on with your taxes so they can advise you better in how to invest your money, or what kind of life insurance to have, or what kind of other things that you can put in place to reduce your taxes. And then if there's somebody that has been around for a while, if they've been in the tax industry for a long time, you may want to ask them what apps or what programs they recommend that you use to track your expenses, to track your mileage, to keep your accounting in one place. So ask them what they prefer to work with, ask them what their clients work with that they know of, so you can also use that. Okay. And here are a few that I know of that I use or have used or heard from other people. I like using TripLog to track my mileage because I'm used to it. It's very easy and it's very inexpensive. So that's one way. It does let you keep track of other things. You can put other receipts in there. Honestly, I don't really do that because I have a different system, but if that's something that you need, it does have that. Mile IQ I've used before. It just wasn't my cup of tea. Something about it wasn't all that intuitive for me. So, but I do know a lot of people that use it and like it. So that may be something you want to give a try to. And then Hurdler, I just found. I was looking for some things and it came up and I saw some good reviews. So if you guys want to try it, do so. If you want to just try something else, or if you know something else, let me know and I'll gladly share with other people that may need help with that. For accounting and bookkeeping, QuickBooks is the one that most entrepreneurs use. It does have different levels. So if you are self-employed or if you are in a network marketing type of industry where it's just you, or anything like in insurance or real estate where again it's just you, you can use QuickBooks for self-employed. And if you own a business and you need more complex things, the bigger the business, the more complex the program can get. So it can scale up. If you decide to do your own taxes, you can use TurboTax. That's the one I'm familiar with. You can use H&R Block or any of the other ones that have their own apps or their own online software. That's fine. If you don't want to do your taxes, but just want to have an idea of what you may owe, Taxcaster is a great way to figure that out. It's a good way to estimate what your final result may be with taxes. And also, if you have a lot of receipts, one great way to keep them is to have them scanned in your computer, because in time, some of them deteriorate because of the paper they're on. So if you want to make a photocopy of it, that's fine. If you want to get rid of some of the papers, a few years ago, IRS started accepting the computer version, the virtual copies for receipts. You don't have to actually show a physical receipt anymore. So a receipt scanner can be a good investment. There are also some apps for scanning. So if you just want apps to scan, there are a few that can work on the phone. I like Tiny Scanner, so that's a good one, and it's inexpensive, but there are some other little scanners for the phone, so those can also work to keep track of your receipt. Okay. Any questions so far?
Yeah, I have a question. So all of these programs that you are listing here cost, right? They cost a little fee. Are they tax deductible as well?
They would be, yes, because you would use them for your business. So if you purchase any of these, then yes, you can deduct them because they will be business expenses, correct? Yeah, a Taxcaster is actually free, but everything else does have a fee, you're right. And there are some that have free versions. Usually these types of things, if you get them in free versions, they have limited capacity to do things. But a lot of them will give you 7 days, 14 days. Some of them might even give you 30 days to check them out and see if you like them and all that. So you can at least use that time to figure out if this is something that you're comfortable with. For me, for instance, I tried using Mile IQ first, and then I went to TripLog. I just didn't like it. And honestly, it's been so many years since I've been using TripLog that I don't remember exactly what it was that I didn't like about it, but it just wasn't intuitive with the way I think. So you have to try sometimes a couple of different ones to see which one helps you. I know also QuickBooks has an app on the phone, and it does track your mileage. So for instance, if you get that, which is more expensive than, for instance, TripLog, but it's more complex, then you eliminate the cost for TripLog. So it can help you reduce your expenses that way. So some of them have multiple functions. Some of them are more limited, but it just really depends on exactly what it is that you need.
So what category do you place it when you're using it as a tax deductible? What, on your tax form,
You can
Where
list
would
it
you-
under miscellaneous.
Miscellaneous, oh,
Mhm.
okay.
Yep, you can list it under miscellaneous because under miscellaneous, you put the amount, but you also can put what it is. So you can, for instance, say apps or tracking apps or business tracking apps or something like that as the category. And let's say you get all of these, well, would be one total under that. So you don't have to list each one. You just put one total. And I use also a scheduling tool for has nothing to do with taxes, but that's also a business expense because it is for my business. So that's that and trip log. I've put them together as a one deduction and they're business apps. So that's how I categorize it. All right, so here are 7 tips to help you either keep track of things or at least know what's going on when it comes to your business financials. So by law, you have to keep all of your receipts for 3 years, all of your tax documents, in fact. The reason I said receipts is because point number 2, credit card statements are not enough. So when you have some business expenses and you think, well, I'm going to pay with this one credit card and everything's going to be there, the IRS says that's not enough, is not proof. Because let's say you have, okay, Chris, you have a project that you're working on and you go to Home Depot, right? Well, you go to Home Depot and you buy stuff that you use in your business, but there's no way to prove when on your credit card statement it just says Home Depot that the expense was for your business and not your home. The IRS doesn't know if you're painting a cabinet because it was a business contract or you just decided to paint your bathroom cabinets because you got tired of the color they were, right? So just saying Home Depot on a credit card statement is not enough. But if you have the receipt from Home Depot and it shows you bought items for this total amount, then now, okay, these are business expenses because you were doing contracts for people and you had to buy this thing, right? So it's very important that you have proof. Again, same thing, if you go out for lunch with somebody, keep the receipt. Yes, it is a business deduction. Well, 50% of it is a tax deduction, but if you don't know, okay, I went to ABC restaurant with Mary and we talked about her getting a new something or other as my potential client, then you don't have any real proof just because your credit card statement says you ate at ABC restaurant. So it's very important to keep your receipts.
I think they upped the percentage on the business dinners.
It's 50% for they don't let you deduct entertainment anymore. Used to be that you could deduct entertainment. This with the tax law in the new tax law in 17, they took out the entertainment. So like, for instance, if you want to take a client to a football game and you pay for tickets, that's no longer a business deduction. But if you're at the game and you decide to buy hot dogs, then that's a business deduction because that's food. Yeah, no, it's still 50%, but there's a difference. If you, for instance, let's say right now, right? I call this a lunch and learn because it's over lunch hour. If you guys want to eat, that's fine. If you don't, that's okay. But let's say we were meeting in person and I was providing the lunch, that would be 100% deduction because I don't buy food for me. I would buy to give it to the people that attend this workshop. So there are different categories of expenses when it comes to meals. Meal when you meet with somebody and you're eating, and then they're looking at it like, well, you have to eat anyway, so you can only deduct half of it. Or food that you're providing for other people because of something you're doing, like you're hosting a lunch and learn, for instance, and then that is 100% deduction. And when you go into the tax return, they go into different categories. So maybe that's what you're thinking of, that you can deduct 100%.
I know my TurboTax guy said that last year was 50%, but this year they've changed it to something, to more percentage. And I clicked on something else and it gave me more deduction.
It could be that this was what he was referring to, so I don't know.
That's fine.
But this is 100, yes, if you give it to somebody else because you're hosting an event, like let's say you have an open house at your business. You want people to come and see what you're doing, or you hosting a cocktail party to celebrate something, or you have employees and you're feeding them because it's the Christmas party. All of those are 100% deduction for the food and beverage and whatever else you're providing for it. But when you go and just have lunch or dinner with somebody, that's only a 50% deduction. All right. Okay, very important point number 3. About or approximate is not good enough for the IRS. And I came across a lot of people that told me I drove 10,000 miles or I drove 20,000 miles on my car. That's very unlikely, probably impossible. The reason is I don't doubt that you drove around 10,000 or around 20,000, but I'm absolutely convinced you didn't drive 10,000 or 20,000. It could be 19,987, or it could be 20,349. But to drive 10,000 or 20,000 is highly unlikely, and it does raise red flags with the IRS. So you have to be careful not to approximate. So keep track of your mileage. That's why when I was talking about the apps, the mileage trackers were the first thing that I talked about, because it's very important that you keep accurate track.
What if I have 2 vehicles that are just work vehicles? They're not nothing but work. So
Okay.
At the beginning of the year, I write the mileage down. At the end of the year, I write the mileage down. Is that fair?
That is fine, as long as you know 100% of those miles are for business.
Those vehicles are
you're
only
fine.
used for my employees to drive back and forth from job sites.
Then you're fine. You
Just
don't
my-
have to
just my mileage.
justify.
Just
Yeah.
my mileage I track. Okay.
Yes, you don't have to justify each day. I mean, you may want to, for your own records and all that, but the IRS doesn't. If it's 100% business use vehicle, then it's fine checking the odometer beginning and end of the year. But when you have personal mileage and business mileage, you want to keep track separate, because when somebody does your taxes, there's a question there that asks how many miles were for business, how many
I got you.
total miles. So it has to be a different number if it's also for
Yeah,
personal.
I got you.
So no, you're fine like that if it's 100% for business. But if it's not, then definitely keep track. All right. When you do have employees, or if you are the only employee in your business, it's important that you have protection in place. And that's life insurance, because if something happens to you, you need the money to maybe hire somebody to replace you, or if something happens to your key employee, you need the money to hire somebody that can replace them. Now, there are different kinds of life insurance policies. The companies that I deal with have also policies in place that pay when you don't die, but you have an event like a terrible accident, for instance, or a critical illness, or a chronic illness where you cannot do things for yourself. And they have what is called living benefits, in which case it pays you as you can't take care of yourself. So if that happens to either you or your employees, you want to have something in place so that way you don't miss on income, and also you get money so you can keep running your business. Now, if you do this for your business, where your business pays for it and your business is the beneficiary, then you can take it as a business deduction. However, be careful that if you deduct the payments for taxes, then the benefit becomes taxable. So you have to kind of weigh your pros and your cons, which way is best for you there. All right. Now, also when we're working, we may love what we're doing, and that's great, right? Chris, we were just talking about how important that is and how it makes you lose track of time. But it's also important to save for retirement, because you want to make sure that one day you don't come to work because you don't have another choice. Now, if you want to work until you're 90, you can, but it's great if you do that by choice and not by need. Saving for retirement can also help you save on taxes now. However, again, you need to weigh your options, maybe talk to somebody about your particular situation and see if it benefits you more to put money aside for retirement pre-tax, and then you pay taxes when you get your money out, or to go ahead and pay taxes now on that, put the money aside, and then don't pay taxes on it when you get it out. So that's the difference between traditional and Roth programs. So if you want to go more in depth on that, we can do that. But keep that in mind, you can save either pre-tax or after-tax money. It can impact your taxes now or later. And then it's important to have an exit strategy. No matter how much you love your business, you want to make sure that at some point you can sell it, whether it means selling it to a totally different person or a bigger business, or whether that means you give an employee or your child an opportunity to take over the business and continue it. Whichever way, it's important that you think about how you're going to exit the business, because that will help you set systems in place so you can do it. Okay. And if you don't know how to do something, if you have questions, if you think that this is too much, that it's too confusing, always ask a professional. And it's even better, what's better than asking a professional is asking multiple professionals. It's very important that whatever questions you have, you discuss them with different people, because you'll get different feedback from them, different opinions, different information, because everything will be based on their own experience. So that will tell you what you need to do, how you can do better, how you can keep more of your money, and how you can set systems in place so that way it's in your advantage. And that's what I had to share for today. I'm here for more questions, but if you want to learn a little bit more about what I do, about money, about things that I work on, business things, here are some books that I put together or I participated in. And also the Brill Conference website is for my Brill Conference. I will have it updated and I'll have more information there. For right now, you can see information on past Brill conferences. We had the one for this year already in March. Thank you so much for being with me today. And let me know what other questions you have.
Okay, that was good information. One question I do have, Serena,
Yes.
when you was talking about the life insurance.
Mhm.
So if you have a life insurance for the individual, say for myself, how is it possible I can make that into a business? Because I am a sole owner, entrepreneur. I have my own business as a notary. So when it comes time that I can no longer, or if something happens, I do have a rider for to get help, you know, and then it's also it's saving up. It's a rider that I can borrow on it and don't have to pay it back and everything. Is there, since it's just a life insurance, is there a way that I can kind of divert it to a business life insurance so I can put those use that as a
Deduct the
deductible?
payments?
Yeah,
No,
deduct the
no,
payments. No.
no, not in your case, because it's just you. If you, let's say if I was working for you and you took the life insurance policy on me because your business depends on me,
Oh,
then yes. But when
Oh, I
it's just you, no.
no.
The
Okay.
thing about the benefit when it comes time for somebody to get the money, whenever it's a life insurance policy, it's best that it's a person, because then it's tax-free. If it was going to the business, let's say in the example that I was giving, I work for you, you get a life insurance policy on me from your business is paying for my life insurance, and your business benefits when I die, then your business will have to pay taxes on that
Mhm.
benefit
Oh, I
that
see.
it receives.
Oh, I see.
But when you, let's say I'm your beneficiary on the life insurance that you have, then I would get the money and I would not have to pay any taxes on that
Oh, I
money.
see.
So it's not really in your best advantage to put it on your business, but also because it's just you in the
Mhm.
business, you can. But if
Oh.
you could, it would not be in your best advantage.
Mhm. Okay, thank you.
You're
Thank
welcome.
you.
That life insurance question, I have life insurance, for my family, for me.
Yep.
Could I buy another policy for the business?
Yes, you can. So
that
life
policy go to
insurance is
my-
not limited. You can have however much you want to have.
But so it would be tax deductible if I buy a $500,000 policy for my business or for me, and they go to the business when I die, not to the family.
Right, you can, yes. You can, you would, basically what would happen is your business would buy the life insurance policy. So you would be the insured person. If something happened to you, that would be the triggering event for this policy. But your business would be the owner of the policy.
Okay,
And I know you do a lot of things in your business, so it would be really considered a key employee life insurance.
Okay.
Because you are a key employee in the business, and if something happens to you, then the business has an issue.
Yeah.
Now, when that money comes into the business, then that is taxable because you're taking a deduction for this policy to put it in place.
that's fine. What if I don't take the deduction? Then it's not taxable then, right?
No, you can do two things. You can do it like that through your business, or you can just get a life insurance policy where, let's say, your wife or I don't know, your child is the beneficiary, but you tell them, hey, something happens to me. You said 500. So let's say 500. There will be 500,000 that will come to you with the purpose of you taking that 500 and hiring a CEO for the business.
Okay,
And then the goal of that CEO would be to make sure the business is growing smoothly or is at least staying at the level that it's at, so it can be sold, let's say, in a year or in 6
then, but
months or whatever.
then is that money taxable?
If it comes to the person now,
Okay, so the money's taxable going to the business if I deduct it.
correct.
So it's better to not deduct it because you ain't gonna, it ain't worth it. The premiums ain't that much. You know what I
Right.
mean?
Yeah,
Okay,
Yeah.
thank you.
usually. Now you can just play with the numbers and see exactly, what that number is versus that number, but usually that's the case. Yeah.
Now, my tax bill every year is, I think last year was almost 10 grand, 11,000.
Okay.
And this year, I think I wrote off a lot this year. I bought equipment for like 20,000. I wrote the whole thing off.
Yep.
Even though I'm still paying for it, I still wrote the whole thing off. I just won't take the payments, write off the payments next year, except for the interest.
Yep.
Is this, I guess, how much of that gets, like if I buy another $20,000 equipment, how much is that actually deducting my taxes? Like, does it take 20,000 off my,
Not of your
Earned
tax
income?
liability,
but it takes it
So-
off
of your
my,
income, yes.
takes it off my income, right? So,
Yeah, but
my
it
goal is-
depends. See, it depends because depending, like a lot of the equipment is something that you have to amortize over a number of years.
Or they let you either do
So
it
then you
right away, or they let you
depreciate
do it
the,
over years.
right, so you depreciate the cost. So let's say you buy something that's, let's say, $10,000 and you depreciate it over 5 years. Now, depending on what exactly it is, it has a certain number of years that you have to use, and that's in the tax program. I don't know it by heart, but if you tell me what it is, I can look it up. But let's say it's 5 years, which that's the tax depreciation for a computer. So I'm going to give you that example. So if you buy a computer, now you're not going to buy a $10,000 computer, but let's say it is $10,000 or a piece of equipment, and you depreciate it over 5 years, then it means you take $2,000
Yeah.
off each
But I
year.
think they give you the option, they gave me the option this
can-
year to do it all at one time.
Yes, you can, or you can do part of it upfront, like let's say 50% or 75% or something, and then depreciate the rest.
Yeah, yeah.
You
I'd
get
rather-
to
I
choose
figure if
how
I'm gonna
you
buy it
want.
every year, I might as well just take the tax credit every year.
Right. So it depends on whatever is in your best interest.
Now, if, let's say, if I were to take some of my profits and invest into real estate or something, is that considered taking my money and not count it as earned income because I'm investing it somewhere else?
No, it doesn't work like that because it will still be after tax money. Now, if the property is bought by the company,
Yeah, I want to buy by the business,
Then-
not by me. It's gonna be to buy by the business.
and then what do you want to do with the real estate?
rent-
Is it
then I'll-
something that you flipping, or is it something that you
I'll
are?
probably- I'm trying to find a way to put some of my money to work.
No, I understand that part, but if you buy let's say you buy a house,
Yeah,
right? What do you want to do with the house? Do you want to flip it or do you want to rent it?
I'll probably rent it because that's income coming in all the time.
Okay, so then you're keeping the place, and of course it generates income. So okay, so then what happens is you would still have to, it will still be originally profit because you made the money, and then it would go into buying an asset which would develop a different business. Let's say it's still within your business, but it goes from your Schedule C, if you're
Yeah.
still running as a sole proprietor, into Schedule E, because
Okay.
then it becomes an expense on the real estate side.
Okay, so that,
Because now you have the asset, which is the house, which you are depreciating
okay.
over the number of years, which is like 27 and a half years.
Then my next question is, I have two businesses. And I'm thinking about either changing the names of both businesses into one,
Okay.
or is it better to get an LLC and put that as the head, and these are two subs underneath the LLC?
It doesn't matter from a tax
I-
standpoint.
Well, I'm looking at it more as I know it's a different question, it's not tax related, but it's more of a loan. Like, the bank will only loan me on one business because the other business hasn't been 3 years. But
Gotcha.
I've been in business but if I combine the businesses, then they've been in business for 3 years.
So
Right?
you want okay, so you're looking to get a loan on the business that's newer, right?
Well, I want to get a loan on both businesses because I know this isn't about taxes, and I'm sorry if I'm,
It's okay.
but if I get a loan through one business, I can't use any of that money for the other business unless they're the same business.
There may be, now I have to research this because honestly, I don't want to give you the wrong
That's fine.
answer, but there may be a way for you to get, let's call them business A and business B, okay? It
Fine,
doesn't
yeah.
matter, right? So if business A has been in business for a long time and business B is newer, because you're the owner, you may be able to get a loan on business A, and then business A loans it to business B. And
Okay.
then business B technically makes a payment to business A, but business A, of course, pays the loan.
But if I put them
So
both
you
under,
may be able to.
but if I open up an LLC and put both of them underneath the LLC, is that a good way to do it?
You can try, but I would talk to the person or at the bank, wherever you want to get the loan, because it may not solve your problem. Because having an LLC, if you go by the history on the LLC, that the LLC will still be new.
Okay. Now, what if I just change the name and instead of Riley Custom Design and Rain from Above Pressure Washing, what if I just make it Riley Custom Design and Pressure Washing?
Are
Is
you
that-
merging the businesses?
Then I just merge them.
Well, that may work, but you would have to merge the businesses.
Well, they're both, I mean, they all go to the same.
No, I
freaking
know.
account.
Yeah, but
It all
you'd
goes into
have
my bank
to-
account, so.
I understand, but from an accounting standpoint, I mean, I can do some research and we can talk about this some more because I'm not an accountant. And
Okay.
honestly, I know the tax side of accounting. I don't really know throughout the year what complexity that would entail to merge two businesses. And I know you're the owner, so it doesn't really mean anything as far as ownership.
Yeah,
There's no change there. But as far as how you keep the books and all that, because that's what they would care about
I
when you
keep-
go apply for the loan.
I keep the books all as one business. I just have two different names and two different websites and two different,
So,
know, I-
okay, but how are these businesses? Are they incorporated? Are they LLCs? Each of
they're
them
both
set up as an
they're both
LLC?
sole proprietorship.
I understand the sole proprietorship, and I'm assuming you do 2 Schedule Cs on your
Yes,
taxes for it.
Yes,
But, so you never incorporated them into an LLC?
No.
Like you don't, okay. I mean, you could, have you talked to somebody about the loan?
no.
And they told you that the.
No, I did, I
business-
talked to Capital One and they said, well, you could get it for this, but you can't spend any of that money on this business.
Okay, we can talk about that because
I
it's a
just asked,
little bit
it
more
it just came up to my
complex.
question. So
No,
I-
no, it's good. It's good. It's a very good question. I will do a little bit more research on it because from what you're telling me, to me, it sounds more like it doesn't really matter because if it's everything under you and you're not, it's not like LLC number 1 and LLC number 2, then it shouldn't really make a difference.
Gotcha. I gotta take a phone call. Sorry.
No problem. All right, Doris, do you have any questions?
No, I'm good. So when is your,
Let me
I
stop
know
the
I
recording.
probably
Give me
missed
1
your
second.
conference, huh?
Yeah, it happened in March. Give me 1
It
second.
was
Let me
Mar-
stop the recording and then we'll talk, okay?
Oh,
So thank you so much for being here today. And
Yes,
this is the
yes,
end
it
of
was
the seminar.
interesting. It was interesting. I really need to learn more about business, filing my taxes, because I've been doing it myself, and I think I'm robbing myself and paying more than I need to, because I do notary and I do, I sell new and used books on Amazon. So that's 2
Okay.
separate businesses, and I get the 1099 and all of that, and plus I have a home, and then I try to deduct, put my expenses, for with the office, and now I just got a new computer, so I'm definitely gonna put that down as but I don't think I'm really deducting correctly or enough for me to have to pay taxes, even though these businesses, they don't take taxes out, so I'm responsible for it. So yeah, so this was very helpful. I have to do more tracking, especially with my mileage when I do my notary, my mobile notary. But now I'm doing more remote online,
Right.
because that's the way of the future.
Yep.
But with my Amazon sourcing, I have to travel to different places to source for books. So that's sourcing and gas and the price of when I purchase books to resell them. I have to take into account. So I'm saving those receipts. I have an app that's called Receipt Hog and Receipt Pal. And that is actually, and I don't think I could really use it to save the receipts, but it tracks all of my receipts because I scan them in. And every time I scan a receipt, I get points, and it turns into cash. The more points you get, the more, cash. But it does have a list of all of the receipts so that could be a way that it's a filing purpose for keeping my receipts.
It can be, but you need to make sure that it has the image of the receipt as well.
Yes, it does. It does.
Oh,
Yeah,
okay.
there is a way.
All right. Well, we can talk a little bit more, but let me just turn off the recording here. Okay.
Okay, well, I'm done.
Yeah.
I'm done. I just wanted to ask